Welcome back to your personal finance classroom, where we break down your money questions to make it easy for you to live your best life. Don't forget to subscribe and hit that notification bell so you can be notified when new videos come out. And if you found this video helpful, don't forget to like it. Today, we're answering the big question that everyone wants to know when it's time to get a new car. Should I buy or should I lease? In today's lesson, we'll break down buying versus leasing your next car to help determine which option is best for you. The short, honest answer is that one isn't necessarily better than the other. It all comes down to what you're looking for out of a car and your finances. So let's discuss your options. Option 1, buying a brand new car. Buying a brand new car means purchasing a car that hasn't previously had other owners. If you have the funds to purchase the car in full, you're all set. But if you're like most people and you don't have $30,000, give or take, to just put down for a car, you'll likely want to consider financing the car. Financing your car means you take out a loan to purchase the vehicle and then pay that loan back over time. With this option, it's important to keep in mind that you'll also be paying interest and fees over the life of your loan as well. When financing your car, you'll likely put down some cash up front and then make regular monthly loan payments. If you choose this option, you'll need to do some research on which auto loan makes the most sense for you. When you're researching loans, make sure you keep these things in mind. The interest rate, which is the cost you'll pay each year to borrow the money, the annual percentage rate, or APR, which is the cost you pay each year to borrow the money, including any fees, the length of the loan, how long you'll be paying this back, and the monthly payment you'll be making. Let's break down the pros and cons of buying a brand new car. Number 1, this might be an obvious one, but if you decide to buy a brand new car, you will have a brand new car that no one has owned before. Plus, newer models tend to have features that older cars don't, like a rear camera, for example. Number 2, you'll also own the car. Well, until you pay off the loan, you'll own a portion of the car. Each car payment you make will go towards the equity of the car. Equity is the difference between what's left to pay on the auto loan and how much your car is currently worth. Unlike a lease, your payments are going toward you fully owning the car. You could consider this point in terms of housing. If you're renting, you're making payments to live in your apartment that belongs to someone else. If you have a mortgage, you're making payments toward a home that you own. Number 3, interest rates tend to be lower for new auto loans. New cars are considered to be less risky because they've never been owned before. Without the wear and tear of a used car, you might have the option for a better interest rate. And number 4, very similarly, because your car is brand new, you'll likely not need repairs for some time. On the other hand, the cons of a brand new car are, number 1, new cars are more expensive overall than a used car. Number 2, the value of a car depreciates over time. While new cars have more value than a used one, when you purchase them, their value steadily declines over time as a result of general wear and tear from regular use of the car. There's a 15 to 20% drop in value in the first year alone, which is something to consider if you have plans to sell your car down the road. And number 3, often new cars have higher insurance premiums. This is because new cars have a higher value at purchase. They tend to be more expensive to repair, and there's more of a risk of theft with a new car. Option number 2, buying a used car. If a brand new car isn't your vibe, you could also consider buying a used car. A used car is considered a vehicle that has had one or more previous owners who have driven the car for personal use. Maybe a used car brings to mind images of your grandmother's old wagon where the seatbelts had stopped working and it needed someone to stand behind it and push it to get it going. The reality is that a used car could still be in like new condition, and you can find one to meet your needs. You can choose to buy an older car from several years ago that might be less expensive, or you might decide to buy a slightly newer used car from just a few years ago. Do some research to determine what make, model, and year you'd like to look for in a used car, because that can also help determine the price that you will pay. Make would be the brand of the vehicle, like Honda, for example. Model would be the specific type of car, like a Civic, and year would be the car's production year. So, for example, you could choose to buy a 2019 Honda Civic or a 2012 Subaru Forester. It all depends on what you're looking for in a car. Just like with a new car, you can either choose to buy the car outright or you can take out an auto loan to pay for it. Buying a used car by paying for it upfront might be more manageable than paying for a brand new car. Depending on how much the car costs and how much money you have saved, you might want to consider buying it outright. But if that's not realistic for your budget, you could follow the same steps we talked about for financing a new car. And while you'd have to purchase a brand new car right from the dealer or manufacturer, with a used car, you can choose to buy a pre-owned car from a car dealer, private seller, or even a family member. Let's get into the pros and cons of a used car. For pros, number 1, used cars are less expensive than brand new cars, so they tend to be easier to purchase in full or pay off quicker if you're financing. Number 2, used cars can still provide some of the safety and comfort features of a brand new car without the new car price tag. Buying a car just a few years old can still offer some of the more modern features you might find in a new car, like Bluetooth connection for your phone or a rear camera. Just make sure to do your research on types of cars and features as well to identify which specific features you might want in a car. And cons, there may be less options available if you're looking for specific things like color, size, and so on. If you have your heart set on driving a red 2017 Toyota RAV4, you'll need to make sure there's one available. Number 2, there's more risk associated with buying a used car. While it would be nice if we could trust things at face value, that isn't always the case, and especially if you aren't savvy with cars like most of us. It can be nerve-wracking to put so much trust into something when you're handing over a lot of money for a car. Make sure to always do your due diligence when it comes to buying a used car. Consider things like test driving the vehicle, checking the car's title, getting a free vehicle history report, checking for any recalls, and getting a mechanic's inspection. Number 3, older vehicles might need more repairs. The older a car gets, the more repairs it might need, which can add up over the life of a car. And number 4, interest rates tend to be higher on used cars due to their age and potential for repairs. Your third option is leasing a car. Leasing a car can be a great option for a lot of people. It can give you the opportunity to drive a newer model of a car without the large payments that come with owning a brand new car. Leasing is essentially like renting a car from a dealership for a determined amount of time. With a car lease, you'll agree to a certain amount of mileage per year. This can cause the price you pay to go up or down. Lower mileage per year can be less expensive, but if you do go over your mileage, you'll end up having to pay for it when you return the car. You'll typically make monthly payments towards your lease, and then at the end of the lease, you can choose to return the car and lease another car, or you can choose to buy the car. Your lease contract will specify a buyout price at the end of the lease, which, depending on the car market, might be a great deal. Leasing a car usually requires a good credit score, so make sure to check in with your credit score and subscribe to our channel so you can be notified when our upcoming credit score lessons drop in the next few weeks. Let's discuss the pros and cons of leasing a car. For pros, with the leased car, you'll have access to a new car, including new features, designs, and warranties, without the ownership price tag. And if you decide to continue leasing when your initial lease is up, you'll always have access to the latest features. Number 2, there's less commitment involved in leasing a car. If you decide you don't like the specific model of your car, or you wish you had opted for an advanced feature, you're only committed to your lease for a shorter period of time. Your lease will last 2 to 4 years depending on the terms you chose, and when that time is up, you get to turn in the car for something else. Number 3, with a leased car, there's likely a smaller initial investment and smaller monthly payment. With a leased car, your payments go towards the expected decrease in value over the life of the lease instead of the full value of the car. And number 4, as we mentioned before, you'll have the option to buy the car at the end of the lease for the buyout price determined in your lease contract. With this option, you're buying a used car where you have first-hand knowledge of the history of the car. You were the one driving it after all. And buying at this predetermined buyout price can save you money if the price of cars is on the rise. You might be paying less for it than you would if you bought it used from a dealer. And finally, the cons of leasing a car. Number 1, you don't own the car. This might not be something you care about at the end of the day, but it's worth noting because you don't own the car, your payments aren't going towards the equity of the car. Number 2, if you continue to lease, you might pay more over time. While you'll get to experience a new car every 2 to 4 years, if you lease one car after another, the cost of lease payments can add up over time. It might ultimately cost more than if you were to buy a new or used car and complete all financing payments. So you'll have to decide if driving a new car you don't own regularly is worth the price. And number 3, there may be hidden or extra fees at the beginning of a lease or the end of a lease period. Make sure you read the fine print and know exactly what you're paying for, or if you'll have to pay more down the road. Whether you decide to buy used or new or lease your car, don't forget that negotiation on price is also a tool you have at your disposal. Do your research and show up prepared so you can get the best deal available to you. Don't forget to like and subscribe. We'll be back Wednesdays and Fridays with new personal finance lessons for you.